There's only going to be 21 million Bitcoin ever in existence. 95% of those have already been mined. And interestingly enough, less than 10% of the global population owns any Bitcoin or any other cryptocurrency. And so
Wow.
while 95% of it is in existence, the vast majority of the global population owns none of it. We're still so much in the early stages. And that's one of the things that I'm really excited about.
Hey everyone, thanks so much for joining us today. I am super excited for my guest that I get to interview today. He is the king of crypto, which I know such a limited amount about. So I'm excited to get into it. So, my guest today is Spencer Jarrett, and he is the owner of the YouTube channel Fresh Prince of Crypto, and he's also the founder and CEO of Digital Asset Consultants LLC, which is a consulting firm specializing in cryptocurrency and analysis and education. Spencer, thank you so much for being on the show today. I'm so excited for our conversation. I think the viewers are going to get a ton out of this. I know that I don't know a lot about crypto, so I think you do such a great job explaining it just in our some of our offline conversations. So I'd love to have you to start with just giving us a background and, background on you. How'd you get into this? A little bit about your medical recovery journey. Would love to kick it off.
Absolutely. Well, first and foremost, thank you so much for having me today. I really
Yeah.
appreciate the opportunity to chop it up a little bit.
Yeah.
And I get absolute joy out of teaching the fundamentals and a lot of the basics of the crypto market. I'm big
Mhm.
financial markets kind of nerd as it is already. And so, yeah, without further ado, my background in undergrad, I was an economics major. I always knew I wanted to do something in financial markets. My father worked in financial services for quite some time, a few different career paths, but that was one of the core things that he did, and so that was something I was always interested in.
Yeah.
My first step into the professional world was actually in the world of telecom. Did that for around 4 years. Did almost 10 years of sports advertising. I was always an
Oh,
athlete
wow.
growing up, and actually played some basketball in college as well. And at that point in my career, when I was still doing the sports advertising, was 2021.
Okay.
And 2021 was a really interesting year for me. Life was looked a lot different than it does today, and that was because I actually, to your point, you mentioned my medical recovery. And at the end of 2021, so just over 4 years ago, almost December 3rd was the 4 year anniversary. I was in a really bad accident, and I unfortunately suffered about a dozen torn ligaments, three torn muscles, nerve damage, and all in
Oh,
the head, neck, and skull area. And so that kind of
wow.
put me obviously into a medical leave. I had 12 medical procedures over the ensuing 3.5 years. And
Oh my gosh.
fortunately, I have since been given a clean bill of health. I have
Oh
come
my
off of that medical
gosh.
leave. It's been the journey of a lifetime. Let's call I
Yeah.
think that's probably the most apropos way to describe it. And the
Yeah.
interesting thing is that actually led me to the crypto market in a really bizarre
Hmm.
way. And so, at the time that happened, I got put on medical leave. I was used to, I was a director of sales, partner sales for that sports advertising company, and had been in that role for a while. We were privately held, got acquired, and
Hmm.
um, I really enjoyed that work. Well, when you go from working full time and growing businesses, and I was also super active, I was doing things like bodybuilding and still playing basketball and golf and running and doing all of the things to nothing. And you're used to
Yes.
having this completely full schedule. And now it's, oh my gosh, I don't know what the rest of life is going to look like now. It's just one big question mark. Um, Bitcoin specifically was something that had already kind of been this curiosity of mine because I'd
Hmm.
been an avid investor, some of that individually, some through a financial advisor. And when I got put onto medical leave and I was going through all of these procedures, one of my goals was I really need to find something to keep my mind sharp, to make sure that I'm continuing to learn, that I have something to focus on other than all of the bad that's going on in life right now.
Hmm.
And so it was actually through just a mutual friend. I was just kind of was going through the digital Rolodex, right? I was trying to figure out, okay, who do I know that has had a lot of experience in the crypto market already? And remember, this is late 2021, early 2022. This is a
Hmm.
full cycle ago. And started reaching out. And fortunately, I was connected with my now business partner, the other co-founder of Digital Asset Consultants. His name's Sean Wildrum. And he had already had a tremendous amount of success. He had had a lot of investments that were, 20x, 50x, 100x, 1000x type investments, and was just a walking encyclopedia of all things cryptocurrency. So that was my kind of crash course into learning about Bitcoin, learning about, Ethereum and XRP and Solana and a lot of the other cryptocurrencies that your audience may have heard of, right?
Hmm.
And that was just tremendous because I was immediately very interested in the asset class. I was interested in learning about the blockchain technology. And so it was through the worst of times that I actually ended up learning about this asset class. And here I am about 4 years later, running a company, helping people learn about this. Um, I would say technology and asset class being Bitcoin, blockchain, cryptocurrency, and helping investors decide, hey, is this something that's right for me or not?
Yeah.
And ultimately, that's kind of one of the pillars of investing is what kind of conviction do we have in the asset in which we're examining. So that's a little bit of my background. Hopefully that does it justice. So
Yeah.
tried to keep it somewhat condensed. That's
Hmm.
about a 30-hour story that I tried to keep to a couple minutes
My
there.
gosh. I mean, what a crazy ride. And so glad to hear that your health is you've been given a clean bill of health. I mean, I always say that health is wealth and really not much else matters if you don't have that. So I'm thrilled for you to hear that. And what a great story on how it kind of led you into learning and now teaching to people. I would love to hear a bit more about just kind of like the principles of cryptocurrency. I mean, like I hear the word Bitcoin and I know that's kind of probably like the most known cryptocurrency, but there's a lot of other ones out there. But can you kind of explain a little bit about like what are the principles and what do you look at? Like what are kind of the things that when you're talking or educating, you're teaching these classes or like the 101 class, what are some of the things that people need to know or that they don't know that would be helpful?
Yeah, absolutely. So the first place I always like to start is before we even get into what is cryptocurrency, just what is currency in general, kind of what are
Hmm.
first money principles. And so
Yeah.
when we think of the iteration of what money has been, we originally had a barter system and then we created coinage and then paper bills and then credit cards and then online processors. So it's kind of the next iteration or the next technology that allows for a transacting economy.
Mhm.
And one of the things that got me extremely interested in specifically Bitcoin, because there is a pretty large differentiating factor between, the use cases of many of these different crypto assets. But sticking with Bitcoin as the core example here, I compare and contrast that to the currency that we most commonly think of, which is the US dollar. It's the world reserve currency. It's what we primarily transact in, even if it is an online payment or a credit card payment, or if we're paying cash or coinage. Well,
Yeah.
the reason that I think Bitcoin is so interesting is because despite the fact that the dollar is the world reserve currency and it's widely accepted, it's on the bill, right? It's good for,
Mhm.
legal tender for all debts, public and private.
Yeah.
Um, that said, I think a lot of people that have studied financial markets or even just, economics in general understand that, especially since the 70s, when we came off of the gold standard, we entered a fiat currency system.
Mhm.
And so, being a fiat currency system, we have the Federal Reserve that can print more money. Well, as we print more money, as that supply increases, the value of each individual dollar decreases, right? And
Mhm.
so, when we look at investments, there's real gains and then there's nominal gains, and a lot of that has to do with the benchmark of what the unit of measure is, in this case, the dollar, right? And
Mm-hmm.
so,
Mm-hmm.
when we think of, well, why is that such a potential negative, right? Why is that a negative consequence? Well, if we're trying to save in dollars and we're actively printing more year over year, well, that means basically every roughly 5 years, we run the risk. If, let's say, we only had our money stored in a savings account,
Mm-hmm.
well, we could potentially be losing somewhere between 20 and 30% every 5 years of our spending power, which obviously nobody wants, which is
Right.
why investing
No.
is so important.
Yeah.
And so the first thing that I always like to talk about before we even get into crypto is, hey, let's make sure we understand what the currency is, what that means to our financial livelihood, and just the core value proposition of investing as a whole. And
Mm-hmm.
that is to, obviously a lot of people think of retirement, they think of, adding to their net worth. For me, investing is protecting, it's growing, and it's making sure that as the years continue, my optionality as far as what I can exchange my savings for
Mm-hmm.
continues to be there. That sustains over a period of time. And ideally, that's going to snowball and grow over time. And so when we think of that part of things, the infinite supply of fiat versus something like Bitcoin that has a very fixed supply, it has an immutable supply, it can't be changed or altered. There's only going to be 21 million Bitcoin ever in existence. 95% of those have already been mined. And interestingly enough, less than 10% of the global population owns any Bitcoin or any other cryptocurrency. And so while
Wow.
95% of it is in existence, the vast majority of the global population owns none of it. And so it's very compelling when we think of, okay, if this is an asset that could be adopted on a wide scale, and hypothetically, if it were to become more of a commonplace as far as unit of exchange in lieu of the dollar or the pound or the euro or the yen or whatever the currency is, well, all of a sudden, while we have the dollar that's getting devalued because it can
Mm-hmm.
be printed in
Mm-hmm.
infinitum, now all of a sudden we have the exact opposite of that in
Mm-hmm.
Bitcoin. It has a fixed supply. And if the demand is going to increase, very basic economic thesis is, well, if it's got a fixed supply and the demand's going up, the value will go up. And
Mm-hmm.
so that's a very rudimentary way of kind of thinking about the value proposition of Bitcoin. A couple other noteworthy things is, the dollar is very centralized. The Federal Reserve dictates policy. They dictate, what those decisions look like. Whereas Bitcoin has no counterparty risk, and there is no central authority that controls the network. And so, that's another big value proposition for a lot of people, because there's a lot of different parts of the world where it's very difficult to save money. There have been
Mm-hmm.
a lot of currency collapses in foreign nations, and where they've hyperinflated whatever that currency is, and then all of a sudden you have millions or billions of whatever this currency is, and it can hardly buy a loaf of bread or whatever it is that you need to buy to live. And so
Yeah.
I think there's also certain parts of the world, geography wise, where this is a really compelling use case. And I'm a big fan of Michael Saylor, who's a huge champion for Bitcoin and crypto as a whole. He's the former CEO, now chairman of Strategy, formerly MicroStrategy, and they're a Bitcoin treasury company, where one of the big things that they do, one of their business model, is that they issue convertible notes to acquire Bitcoin. And so people basically are buying that stock in anticipation of future increase of the value of Bitcoin. Well, one of the things that I love that he talks about, and I've absorbed a ton of his conversations over the years, is that Bitcoin it doesn't just have all of those nice principles. It's also very easy to transport it. And he uses travel. So let's hypothetically say it's a catastrophe, right? And so,
Mm-hmm.
if maybe there's an emergency and you needed to travel, or there's war or famine or some awful experience, well, if you're saving in gold bars, it's really hard to transport
Right.
those.
Sure.
If you've ever tried to fly through an airport with $500,000 of cash, you're probably not going to get very far. Whereas Bitcoin, you can have a thumb drive or a ledger or a cold wallet, and it's very easy to travel. And so, that's another really interesting, I think, example of where this
Yeah.
asset can actually be quite beneficial. And so, is it perfect? The answer is no. There are still pitfalls. There's still things that I would argue could be improved, right? And
Okay.
so, you've heard probably horror stories of people losing their thumb drive. It had all
Yeah.
this money on it. Now they're searching through garbage dumps trying to find their
Yes.
Bitcoin. And there's the ability to get hacked, and we've had crypto exchanges fail, and there's been all kinds of unfortunate things that have happened. But it is a really compelling technology.
Hmm.
The fixed supply, the decentralization of it, and blockchain technology as a whole, I think make it really interesting. And last thing, and I'll turn it back over to you. That was a very long explanation, but wanted to keep it somewhat thorough. Um, is that a lot of the large money managers are starting to suggest some level of exposure,
Hmm.
whether it's BlackRock or Fidelity or, even Vanguard has recently opened up crypto to some of their clients. And, they're suggesting anywhere between 1 and 5 or 6% as a
Wow.
potential aggressive exposure for a portfolio. So it is starting to become much more of a mainstream thing here over the course of the last couple of years as well.
That was an awesome explanation. So I kind of have two follow-ups on that. Like, and this is super, super basic. This is coming from somebody that doesn't know. Why is it limited to 21 million? Like, how come that is the limit? Who set that? And why can't it be changed? And then number two, is there any type of a framework or regulatory body that does kind of keep guardrails on what the rules are of Bitcoin or crypto?
Sure. So, two-part question, two-part answer, right?
Okay.
So, as far as the 21 million, that was involved with the programming of the Bitcoin network. And
Okay.
so, what happens is, a lot of your audience again has probably heard of Bitcoin mining. There's publicly traded companies that their core premise or their core business model is actually to mine Bitcoin. And what that looks like is you have large computers, basically tons of computational power that are solving complex equations and algorithms to validate transactions on the Bitcoin network. And right,
Okay.
so kind of imagine almost like a large data center storage looking facility with all these computers and fans and cooling systems. And they are trying to solve these problems and equations so that way the Bitcoin network can operate. Well, the reward mechanism for the computational power that is getting lent to the network is the actual Bitcoin. And so when they say Bitcoin mining, well, every 4 years, that reward gets cut in half. And so every 4 years, not only does it have the hard cap of the 21 million terminal supply,
Uh-huh.
but there's also a slower drip every 4 years on that reward mechanism. And so when you look at the increasing demand and then also you enter
Mhm.
the scarcity part of the model, it's actually really interesting. The One of the big question marks of Bitcoin is the white paper, the original thesis of the technology was written by an author named Satoshi Nakamoto, excuse me, and no one knows exactly who that person is. And there's a
Interesting.
lot of speculation. Was it Adam Back? Was it John McAfee? Were there some of these other people involved back then with
Ah.
cryptography? But the fact of the matter is, no, someone probably knows somewhere, right? But
Hmm.
it is widely accepted that the creator is Satoshi Nakamoto, and as of now, beyond that, as far as public knowledge, it's a big question mark. And so that's one thing that a lot of the investors that I talk to, or clients that are trying to learn, that's a little bit of a point of skepticism, right? And so that
Right.
is part of the equation. As far as regulatory bodies, as of now, we are trying to actually pass the Clarity Act into legislation. And so that's going to potentially give a kind of jurisdiction framework, regulatory framework. There's been a lot of conversation, is the CFTC going to end up being
Hmm.
the governing body? Is it going to be more the SEC? whether that's Bitcoin or Ethereum or any other cryptocurrencies. And so that's still a little bit of a question mark. And it's actually kind of a uh, widely accepted thought that once regulation comes into play and
Hmm.
institutions and other investors, or maybe even, some whale size investors, once that is there and there's less question marks, then that might spur some additional interest in the crypto market, because that's one of the things that really, until the ETFs came online, which started back in early 2024, there was not a whole lot in the way of institutional interest in Bitcoin or any other cryptocurrency. And so we've seen that morph very quickly,
Uh-huh.
because now BlackRock's Bitcoin ETF, which is IBIT as the ticker, actually is more profitable for the company than their S&P ETF. And so that's
Interesting.
that's a wild
Yeah.
transformation in a very small amount of time,
Yeah.
that's actually a more profitable product for them based on the
Hmm.
fees and all the other structures. But the fact that their Bitcoin ETF is more profitable than the S&P 500 ETF is a huge, I think, sign that says, hey, people are taking this a lot more seriously at this point.
Yeah. Well, that's fascinating. And it's interesting because this administration that we have currently is really been the first one that I know of that's been super open and actually really trying to move the crypto markets forward a bit and intertwine them for many of the reasons that you've mentioned into kind of everyday investors. I'd love to get your thoughts on how you think potentially we may see crypto investing be in like mainstream markets, mainstream investments. So, like people might have their E-Trade account, or they might have their Ameritrade account, or with their financial advisor where you can invest in like an ETF fund or a mutual fund. What are your thoughts on that and the opportunities there for regular investors coming down the road?
Yeah, and that's a perfect question for me, because we primarily focus on individual retail investors at the
Okay.
consulting firm.
Oh,
Those are the
excellent.
folks that we're educating and
Okay.
saying, hey, this is what crypto is. These are some of the value propositions. This is how to maybe do the research and
Uh-huh.
pop the hood and really take a deep dive examination of, hey, is this something that you want to consider interesting in?
Hmm.
We're not financial advisors, so we are true
Hmm.
consultants and primarily educate. But to your question, fortunately now you can actually buy select crypto ETFs on a lot of traditional brokerage platforms already today. And
Okay.
so you can get exposure on E-Trade, on platforms like Robinhood. There's several others. One piece of news that we got earlier this year, Schwab is going to be introducing it
Wow.
effective 2026. We've seen Vanguard clients be able to access it. And so as we have seen more and more, and by no means is that a comprehensive list, there's tons of other places where you can get exposure. It used to just be crypto exchanges until the rise of the ETFs back in early 2024. Now we have Bitcoin ETF, Ethereum ETF, Solana, XRP. The list is
Wow.
HBAR. The list is continuing to grow. And there are now, I believe it's between 70 and 90 other pending ETFs where just in a traditional brokerage account, you can get access via the exchange traded funds. Not to
Okay.
mention, most individual investors can gain access to the crypto market through an exchange. The number one globally, as far as by market share, is Binance. Here in the US, the two of the most popular are Coinbase and Kraken. We don't have
Okay.
affiliations with any of those, but those are both US based. Crypto.com is also based here in the US as well. And so it's actually becoming easier and easier all the time to get exposure to that asset class. My
Okay.
speculation is that as more ETFs come down the line, it's going to continue to get easier. Maybe even we see some indexed crypto funds where maybe you can buy a basket of different cryptocurrencies, things like that.
Yeah.
I'd be remiss to think that is probably not coming in the next few years. I think that's probably just a natural evolution that we're
Hmm.
seeing in the space. One of the other ways that people are finding that they can get exposure is through the we call them DATs, but they're digital asset treasury companies. And so Strategy or
Oh,
MicroStrategy they were really kind of the first of their kind, where they
okay.
started buying Bitcoin in bulk on the company balance sheet. And then that
Interesting.
really increased the interest in people buying their common stock. And,
Mm-hmm.
the volume of that stock went through the roof as far as, options trading and all that kind of stuff as well, because
Yeah.
once they started to aggressively buy Bitcoin, people saw that as an opportunity, even before the ETFs existed, to get kind of backdoor exposure to Bitcoin as an asset because they held so much on the balance sheet. Well,
Yeah.
now not only there's many, many, many companies that are starting to include Bitcoin on their balance sheet.
Uh-huh.
We've seen Ethereum treasury companies rise. Tom Lee, who's he's on CNBC quite often. His company is called Bitmine, and they are an
Okay.
Ethereum digital treasury company. SharpLink Gaming is another one where they're buying and just accumulating a lot of Ethereum. And we're seeing treasury companies pop up for all different types of cryptocurrencies now. And so that's getting really
Fascinating.
interesting too. And so
Yeah.
we're seeing many different ways for the average investor, even if it's just through a traditional brokerage account at home, they can still get exposure to this. I think the big thing is going to be, when do all of the big investment shops, and when does it become commonplace
Mhm.
at your traditional financial advisory firm? When do we start seeing pension funds start to buy and things like that? And so the interesting part there is, I think there's still a tremendous amount of potential growth to see the market cap of cryptocurrency continue to increase over time. Can we say that to a 100% level of certainty? We cannot. But
Right.
that is the growth rate that we're seeing as far as the overall crypto market cap. We're getting much higher lows every time we have a bear market, and we're seeing the crypto market cap just continuing to grow over time.
Yeah, I mean, it's fascinating when you think about the opportunities that could come down the pike down the road. And we were already seeing, like, as a lender, I've seen just in the last 5 years the evolution of it being completely banned from mortgage transactions to now we have literally full loans. Like, we closed a loan a few weeks ago that was full cryptocurrency, and we actually did what was called an asset utilization loan on it, meaning we took the valuation of their crypto account and we used, an underwriting math, a guideline conversion where we converted that crypto into a qualifying income stream for them to qualify for their loan. And we fully qualified their loan solely off of that crypto account. And that's the first one that I have seen where we've been able to do that. Like, the person was not employed in another job. They just had a great crypto account. They wanted to buy a house, but they didn't want to, liquidate all of their investments, their crypto investments, their other investments. And so for years, we've been able to do those asset utilization loans on, if you have mutual fund investments, stock and bond investments, but to be able to qualify it solely off of somebody's crypto account was fascinating to me. And it was a $4 million house. So we're already seeing in the lending sphere where it's really, really evolved. And I think I could foresee that if there is a regulatory body that does come in, if it's the SEC, FTC, or if they put a new body in place that kind of gives some sort of a regulation, so to speak, to it, where you could really see a lot of people jump into this and buy into some of these funds that are the crypto funds. Yeah.
First, what a wild turn of events, right?
Yeah.
That, a few years
Yeah.
ago, the former administration, the former SEC was,
Hmm.
not the friendliest towards the crypto industry. And
No.
now all of a sudden that landscape has dramatically changed. And to
Yeah.
your point, the ability to have a loan collateralized based on Bitcoin holdings or crypto holdings is just a tremendous leap forward. I remember
Yes.
I was on X earlier this year and I saw that news get released for the first time, and I was like, that is interesting.
Yes.
I actually know a few people that have done that have been able to save in Bitcoin over years to buy a home. And
Yeah.
you think about the power of the fixed supply and the growth rate. On any given year, and anyone can Google this statistic, that the U.S. dollar loses somewhere in the ballpark of 7% of its spending power year over year on an average year. I want to
Yeah.
say in a study that I put out in part of the workshop, I think it's bls.gov. You can go find it. But that said, you look at Bitcoin and you look at the cost of a home, right? And
Yes.
so back in
Yes.
2020, 2021, average home price, I want to say was in the 300K range. Now it's a
Hmm.
little over 400K.
Hmm.
So it now is roughly, almost a 30% increase on the average cost of a home. Well, monetized in Bitcoin, it's actually gone down over 50%. And so when you think of the ability to exchange the currency, in this case, the cryptocurrency,
Hmm.
for the desired outcome instead of it's going up in value instead of down in value. The annual growth rate of Bitcoin since inception is over 40%, which is remarkable when you think of just
Crazy.
compounding over time and what that can mean. Now, we
Yeah.
do always have to consider things like the law of diminishing returns. It's not
Sure.
sustainable forever,
Sure.
right? But that said, even if it were to come down a little bit, maybe it goes from between 40 and 50% to 30-40 to 20-30. That's still outperforming the S&P 500. That's still outperforming all indices, a lot of other potential asset classes as well. And
Hmm.
so the fact that you can now get a collateralized loan on an asset that is increasing in value in lieu of an asset that is proactively getting debased by by our own government, it is a compelling thought. Does that run forever? Do we at some point see something change or shift? There are still a lot of question marks. Currencies have been around forever. Cryptocurrency, Bitcoin, roughly 15 plus years. And so we're still so much in the early stages. And that's one of the things that I'm really excited about, because sky's the limit. Obviously, that, positive or negative, I think duality is going to be a part of that regardless. I think there'll be both good and bad that probably comes down the line. No different than the internet or any
Oh,
other
sure.
really
Yeah.
transformative technology.
Yeah.
But yeah, it's just been such night and day. There was actually it's called Operation Choke Point against the crypto industry from the former administration. Politics aside is irrelevant, but just to see that change for the industry has been remarkable.
Oh, absolutely. And you bring up such a great point about, because we talk about the affordability, like especially in housing, is and the problem is wages haven't kept up. And I think about 20 years ago when I got in this business. I mean, it was completely different. Like the median price of homes has skyrocketed in 20 years. And although wages have gone up, they haven't gone up like on a 1-to-1 ratio. And so and to your point, there's so many people that have their money sitting in bank accounts that are not earning them anything. And when you go and adjust that for inflation, to your point, they're going backwards. They're not making anything. And so if you can mainstream an investment like a crypto where somebody can get the kind of returns, or like even if you say even half the returns, that would really allow someone to get ahead of the game, to be able to get ahead with investments, get ahead with buying a home that's kind of commensurate with where that median house price range is. Yeah, I mean, I thought that was
Absolutely. And
fascinating.
to that point, we've seen the cost of living across the board increase so much in the last 5 years. And
Yes.
for the listeners, it's my speculation. It's pretty widely agreed upon that one of the reasons for that is in 2020 and 2021 we printed roughly $5 trillion, and we did go
Yes.
into an interest rate hike cycle. We went into a quantitative tightening cycle after that, right? And so some of that got run off. But
Sky
when
high
we look at
inflation.
the inflation that happened as a
Yes.
result.
Yeah.
As one of my favorite analogies is, printing money is a lot like drinking alcohol. Well, while it's going, it's really interesting, but afterwards, there's the
Yes.
hangover impact, right? And then,
This is true.
once quantitative tightening started and interest rates started to rise, the dollar goes parabolic, and then all of a sudden, equities and crypto enters a bear market in 2022. And so that tends to follow the debt cycle, the business cycle. But to your point, I think this is really important. It's wages have not kept up with those increase of cost of living, and whether it's houses, whether it's food costs, whether it's cost of services, it just simply has not kept up over the course of the last 5 years. And I think that's one of the reasons why crypto is gaining popularity amongst retail investors, because they're feeling that tension. They understand that their wallets they're tighter, right? Their budgets are a lot more strapped than they were. And so if that process were to continue, I think even the difference of moving from something like a traditional savings to a money market account
Yes.
slows the bleeding a little bit. Investing in something that's much lower volatility and has a much different risk profile, maybe index funds, maybe something. But there are a lot of things that the individual investor can learn to say, hey, how can I get this money working for me? It could be dividend stocks. It could be, there's so many different avenues. And I think one of the things that happens within crypto, and, I've been called anything from crypto bro to this or that or the other thing, right? Is that there's a lot of tribalism, right? Oh, if you don't have all your money in Bitcoin, you're this crazy person. Or if you have any, you're a crazy person. Well, I think the reality is just somewhere in between. I'm a huge proponent of a diversified portfolio and tried and true investing principles. Kevin O'Leary is someone that I think has a really interesting investment philosophy. He prefers outside of real estate, no more than 20% in any one class, and then no more than 5% in any single investment. And I think that's really interesting, right? And so when you look at different asset classes, it could be real estate or equities or commodities or crypto or whatever it is, wherever that money is, if it's an active investment vehicle, it's pretty sound. Obviously it's, can't give financial advice or anything like that.
Of course not.
And there's so many different ways to offset that debasement of the currency. And oh, by the way, that 7% does not include inflation metrics. And so, kind of the benchmark from my perspective becomes, hey, how can we get 10 to 12+% as that annual rate of return? And that really just gets me back to equilibrium, back to break even. And so when I think about that, I think that's where a lot of the interest in cryptocurrency comes from. And we can get into some specifics as far as how it trades and that kind of thing, but probably, I don't know if we have time for that today, but I think the interest comes from that, especially in the last 5 years, we've seen the adoption curve just skyrocket. And I think it is that just feeling of the tightening of the budget and the money's not going as far as it was because of what we've done with monetary policy. I think that's a huge driving factor in the interest level.
I would actually love to have you kind of explain a little bit about how it trades. Like if you're able to kind of give a description, just high level on how it trades.
Yeah, so we're at a really interesting place. As far as the core thesis of Bitcoin is kind of this opt out of the system, right? And so, I want my dollars to be, decentralized. I want it to be away from government involvement, or however we want to phrase that. But the interesting thing is cryptocurrency, as of now, despite the fact that it does have those monetary principles of fixed supply and the decentralization, all those things we talked about at the beginning of the conversation, it still trades like an aggressive risk asset. And I think that's really important to understand, because despite the 40+% growth rate, it still has and is subject to, until further notice, unless we were to see this change, subject to large drawdowns. The volatility is just part of it. And I think the highly liquid part of what cryptocurrency is makes it that way. And so when we think of how markets trade, it's primarily based on human emotion, fear and greed, right? And so with that understanding in mind, well, in times of fear, people are going to want to pull money out of a risk on environment. Well, cryptocurrency trades 24/7, 365. And so if we get bad news on a Saturday and people want to feel safer, maybe they want to, act on feeling a little bit of that fear. Well, what's the number one thing that they have immediate access to? Well, the stock market's closed, the futures market's closed, crypto's open. And so what we have
Mm-hmm.
seen is that the cryptocurrency market, when we look at January of 2020, before we had the large, tariff related correction in the stock market back in March and into the lows in April, we actually saw crypto lead the way a little bit. And
Mm-hmm.
so when we started to see the bounce, it kind of did the same thing too. And so what I see in that market, again, until further notice, all trends are trends as long as they're active. They could always change. And so this is more of a correlation than a law or a principle of the market. Um, but I see it as a barometer for risk sentiment and a
Mm-hmm.
barometer for fear and greed from investors right now, because it is so volatile and it is still tracking with indices for the most part. There have been times where it is decoupled, but for the most part, it's trading with risk assets. And so while I do believe and I have conviction in the long-term monetary principles of the growth of that network and the value proposition of what crypto can be, it is still trading in a different way today. It's not trading like a safe haven asset, it's trading like a risk asset. And I think that's one of the things that investors, once they start to do their own research and really dig into, is this for me or not? There is still a
Yeah.
tremendous amount of volatility in Bitcoin, and most of the other cryptocurrencies are even more volatile as far as the large swings that can take place.
Yeah, it's probably not something you don't wanna put your retirement money into it. It's probably like you probably wanna put money in it that you're okay going to Vegas with. I would am I kinda right about that?
Yeah, at this point, I look at investing in anything highly speculative, which me
Yes.
personally, I would have to include cryptocurrency as a part of that
Yeah.
because it's such a
Yeah.
new asset class. It is highly speculative. It is subject to the
Sure.
volatility. And so, for me, any individual retail investor that doesn't have all of the education, that maybe they don't have
Sure.
securities licenses, they're not a advisor. I think investing or trading money, only money that you can afford to lose, is kind of a common place to start,
Yeah.
right? You
Yeah.
don't want to be putting the rent money or the grocery money into the crypto market. There has to be a sense of responsibility. And so, I
Yeah.
think that's really important to understand. I've heard horror stories. There was actually a big liquidation event back in October just of this year,
Oh,
so a little over 2 months
interesting.
ago. And hear unfortunate stories of people just losing millions and millions of dollars, and and really over the course of a few hours,
Mhm.
trading with leverage on crypto exchanges and different things like that. So crypto is still, even though we've seen so much development, it is still a little bit of wild west with some of the things that we're seeing. I do think regulation will help. I do think
Yeah.
seeing things happen with governing bodies will help alleviate some of that, as far as some of the volatility that we see on these exchanges. But it is an asset class that carries a lot of risk. And so, that's something that if anyone is not in crypto, but they're interested because of the volatility, because of the large returns, with any reward, and it
Sure.
doesn't matter if it's a stock or a crypto, even, just buying common shares of stock, there's still a tremendous amount of risk involved. And when that
Mhm.
gets amplified, I do think people need to go in with kind of sober goggles a little bit to make sure that, hey, yes, there is potential for extreme upside in many cases. But if that is the case, then there's also the potential for extreme downside as well. And so learning how to navigate the market and really cultivating a skill set is super important. One of the reasons why, a lot of people take our workshops and sign up for our service. My partner and I have nearly 30,000 hours of trading and analyzing the market
Wow.
combined, just the two of us.
Oh my
And so he
gosh.
obviously has a little bit more than I did. He's got another 5, 6 years of experience on me. But even I have 13, 14,000 hours of actual experience trading the market and analyzing the market. And so, they say it takes roughly 10,000 hours to master anything. I would argue that no one ever masters trading or investing because it's, kind of like playing a sport, right?
Yeah.
There's always a way to continue to perfect the craft and chase that perfection that you'll probably never actually achieve. Um, I think even understanding some of the statistics of the best traders in the world, are still going to be wrong 20, 30% of the time.
Mm-hmm.
And that's got to be
Yeah.
part of it as well. And, investing versus trading, even understanding the difference between how to execute an investment strategy versus a trading strategy is wildly different. And so I think those
Yes.
are all things that retail really needs to educate on before they try to put their money to work.
Oh yeah, for sure. Well, I mean, markets are imperfect. That's just, yeah, that's just how they are. And just, to clarify for all my listeners, like what we're talking about here today, we are not giving any kind of investment advice. Like I am always a proponent. So is Spencer. Everyone should have their own financial advisor and have a plan with their financial advisor. This is really like to just talk about, like, I love to really talk about various different things that are interesting. And it's such a hot topic right now that, it's fascinating to talk about, especially with an expert like yourself. I know coming from, I've spent my life in finance and my background's finance. And this has always been fascinating to me. And, it's crazy some of the returns we have seen. That said, we've also seen some crazy volatility where it's gone down too. But the fact that it's limited is compelling potentially. And it's going to be fun to watch it, I think, over the next few years. And if there are structures that are put into place, that give it a bit more credibility for certain people that are like, I don't know. I don't know if I want to jump in, to just see if it becomes mainstream over time. Because I could really see potentially where it could help a lot of people potentially get some higher returns, potentially, if it works into their investment strategy, of course.
Yeah, I think that's aptly said. And, when it comes to the compelling nature of crypto, I think it goes well beyond Bitcoin.
Yeah.
There's a couple other narratives that are involved in this market right now. One is tokenization of assets. And so, even Larry Fink of BlackRock, who, when he speaks, a lot of people listen, has said that, bringing assets, whether it's commodities, metals, equities, obviously crypto is already traded on chain, bringing those other assets onto blockchain technology to be able to trade 24/7, to be able to trade globally is something that may be coming. And so, one of the things that we're constantly researching at our firm is, well, if that landscape were to take place, who might some of the beneficiaries be?
Yes.
Which ones of these crypto companies are well positioned with either partnerships or a use case to succeed? One of the things that we're seeing with the Genius Act as well, not just the Clarity Act, the Genius Act is stablecoin regulation. And so stablecoins kind of for the sake of listeners is a crypto asset that is pegged 1-to-1 to the US dollar. And so on a crypto exchange, for example, oftentimes people will have instead of a cash account, like in your brokerage account, it'll be sitting in a stablecoin. And so that's always going to stay tied to the price of the dollar. And so if we start to see stable coins get integrated into the financial markets, if we start to see tokenization of financial markets, then those are a couple other things that could make crypto and really blockchain technology and distributed ledger technology much more relevant and very quickly. And so these are some of the things that I'm thinking about. And really payment rails is one of the other big things that a lot of people that are investing in crypto are so interested in. Being in finance, you're familiar with SWIFT. They move money all around the world. But, you look at something that, whether you're paying for a wire or you're paying for something to go through the banking system, sometimes it can take several business days. There's single points of failure. There's, it doesn't always make it if you're trying to send money internationally. There's potential pitfalls. It's pricey. It's slow, right? Whereas now there are certain cryptocurrencies that are built to where you could send millions of dollars to a wallet to someone else on the other side of the world in about 3 seconds, and it's going to cost you under $1, which
Wow.
is pretty wild.
Yes.
And so, depending on what kind of adoption of that technology we see,
Hmm.
we're still in such a speculative place in this market. It's not crystal clear who the winners are going to be. I
That's
had a
right.
I had a speaking engagement down in Oklahoma in June where I was kind of sharing some of these insights, and I kind of use the analogy of crypto today is very similar to where the internet was in the 90s. And, no one knew who the ultimate winners will be. Who's going to be Amazon, who's going to be Google, who's going to be Yahoo, who was maybe a clear front runner to Google at one point. Pets.com went away very quickly.
Yeah.
We didn't know, back then. Obviously that caused a lot of the dot-com bubble, but it wasn't necessarily clear that Amazon, when they were only selling books, was going to turn into what it did. Right.
Hmm.
At one
Hmm.
point, there was a time when Amazon stock went down by 90% before it ultimately became what it was. And so that's one way to look at it. I also think it's really interesting, if you correlate it to maybe even social media, because cryptocurrency at heart is software. It's basically programmable money when you want to think of it
Hmm.
that way. And so, when you look at the continual development of social media since the early 2000s, first it was Friendster and MySpace. And even before that, AOL Instant Messenger. I'm dating myself a little bit because I was growing up as all of this was coming out. And so we've seen all of these continued developments. But again, there was a point in time where, as an end user, when I was in high school, I liked MySpace better than Facebook. I thought it was cool. Obviously, I
Yes.
didn't know what was what because Facebook ended up being
And
much, much bigger, and then Instagram and Snapchat and now TikTok and all these other things.
yeah.
And so I think we're in a very similar place with the crypto market, to where there's a lot of really compelling technology. There's crypto companies that are building AI agents and a lot of different
Hmm.
ways to utilize the convergence of blockchain and artificial intelligence technology. And you think about all this stuff, it's really cool. But how does it get adopted? How does it get injected into everyday life? What changes consumer behavior? Which ones become the market disruptors? That's where we're speculative investors right now.
Yeah.
And so it kind of all gets tied together. But some of those other use cases, I think, are also really compelling. It's just going to be time that ultimately tells us if and when those are some of the ones that end up surviving.
Well, and also, I mean, what are your thoughts on how AI, with how AI's, really become a thing in the last, year or so? Like, how do you foresee AI playing into, crypto and the markets and so forth?
Yeah. So really, I try to keep everything from a 30,000-foot view, and I try to look at complex things through as most simple lens as possible.
Yeah.
Artificial intelligence, I think, was a natural development because we have just seen the world get more and more and more digitized over time, right? We're the most digitally connected we've ever been. We've seen such tremendous waves as far as technological advancement. I mean, we're doing this a couple thousand miles apart right now. I mean, so just to
Yes.
even have this conversation digitally through Zoom, this wasn't happening, a
Mm-mm.
couple decades ago.
Mm-mm.
And so we're seeing such a rapid rise of this technology. And I think blockchain, like artificial intelligence, could end up changing consumer behavior as it gets adopted. We're already seeing, virtually every major corporation try to an artificial intelligence strategy. How can we use this to become more efficient? How can we use this to drive productivity, get more profitable? We're seeing people start to fear, oh my gosh, or am I going to lose my job to AI? And
Hmm.
so there is going to be a tremendous shift in, I think, global economy, I think in tech and software, and I think blockchain is a likely part of that equation. Again, can we say definitively? I don't think so.
Sure.
But given how many advantages blockchain has over old payment rails and some of these other things that are used today, I certainly think it's useful. And if artificial intelligence becomes more and more, these AI agents that kind of govern themselves, there's companies building things to where an AI agent can actually negotiate a deal on its own without human involvement. That's pretty gnarly. And so,
It's
as we see some
crazy.
of this stuff happen, one of the thoughts that I've had is, well, does that ultimately lead AI to choose blockchain because of the efficiency? And does that
Uh-huh.
say, hey, this is the money of the future? I think there's still a big question mark there. I think there's still the human element of things. People trust what's tangible. They trust what they can, hold in their hand, which as of now is it's cash, it's dollar bills, it's coins, it's you can hold your credit card, and all of that's great.
Hmm.
The big question mark for me when it comes to blockchain and AI and all of these things is at some point, do we enter a cashless society?
Yeah.
And I think there's a lot of healthy skepticism about what the repercussions of that would be, because in a lot of ways, I think cash represents freedom. And so that's an
Yes.
interesting development that could come down the line. But to simply get back to your ultimate question, um, I think this technology, the genie is just now getting out of the bottle. And in the next 5, 10, 15 years, the world could look a lot different.
Oh, absolutely. Yeah, and I'm with you on these conversations that are starting to happen about like, okay, are we going to be a cashless society? Because I agree, it's like cash, being able to hold on to it, it's freedom. So it's going to be interesting how that evolves for sure. So outside of like looking at future technology, are there other areas of interest that you have outside of like crypto and blockchain kind of things you're looking at? Like, we had talked a little bit about like nuclear fusion, robotics, so forth.
I think those are
Yeah.
two that are really interesting. And
Yeah.
even you were kind of seeing silver is at an all-time high right now. We're seeing gold has had a tremendous year. I think metals,
Yeah.
and a lot of that on the silver side specifically, I think is really interesting. It's something I was talking about on YouTube. I think it was a guest appearance on another YouTube channel. But silver is interesting because it's used in the creation of AI data center technology and infrastructure, and so it's
Yeah.
highly conductive. It has interesting properties. Obviously, it's been used as money for centuries. I would say millennia, really. And so metals I think are really interesting because as this technology needs to be built, you look at what NVIDIA has done because the semiconductor technology, it's tremendous. And so
Yes.
as we're building this tech, it kind of goes back to the gold rush versus picks and shovels. Do you want to be the one mining for the gold, or do you want to be the one selling the picks and the shovels and the buckets, right? And so, I think there are going to be tremendous investment opportunities based on the backbone of some of these things. So, if nuclear fusion were to become really big, or well, are there uranium companies that stand to benefit from that?
Hmm.
Do those companies solve energy issues? Because one of the big concerns is, can the power grid handle an AI driven economy? Can the power grid handle a blockchain driven world? And right now, I would say that's a little bit of a question mark. And
Hmm.
so I think as we see these developments, there are certainly going to be other industries that benefit. And being forward thinking investors, obviously in blockchain, but we look at, all of these things, the entire investable landscape, we focus on innovative technology. And I think specializing and having our a niche vertical there is important to us. And so we don't get too broad because I think at that point it's almost paralysis by analysis because there's so much information out there and so many options.
Yeah.
But those are a couple that I think are really compelling is, robotics and AI moving together, AI and AI data centers and all of that infrastructure. And then what we're seeing as far as, minerals and metals and all of the components that are required to actually build and sustain this technology. And so I think those are all really interesting sectors that could stand to do well if that growth curve continues. Obviously, if that changes, then at some point that could go the other direction. But those, as of now, are some of the other areas that I think are pretty interesting.
Oh yeah. No, definitely. I think it's fascinating. As you have gone through your crypto journey, has there ever been cases where like you've kind of doubted it, where you're like, okay, is this really cool? Or have you always kind of been all in on it?
I think that has ebbed and flowed over
Okay.
time. And
Yeah.
one of the things that we always talk about is the emotional roller coaster of investing and trading.
Yes.
And I think if anyone says they have mastered their emotions to the point to where they don't experience them at all, I
Mm-hmm.
think they're being somewhat disingenuous. And so
Yeah, sure.
I was really fortunate that I really started to accumulate cryptocurrency in a bear market. That was just fortuitous
Ah,
timing.
uh-huh.
And I was presented with some outstanding opportunities. But,
Yeah.
I'd be remiss to say that during these large swings of volatility, where we'll see something go up 2, 3, 4, 500, 1,000%, and then subsequently drop 50, 60, 70, 80%. That's
Yeah.
the norm in this asset class. And so, you know, it's one thing to, I think, understand that and even know that, but to continue to experience it multiple times. There are times when it's like, is it going to hold support this time? Is this, is the run going to end? Are there, certain macro headwinds that might be working against us? And so that's a constant
Yeah.
battle. And that's a really good question. And, even seasoned veterans, we all have our days where, maybe we're not seeing the market as best, maybe we're not having a 10 out of 10 day, maybe we're having a 7 out of 10 day.
Mm-hmm. Mm-hmm.
Maybe there are some doubts about some things, whether it's, bad news that comes out or a potential obstacle. And, especially before this administration, because one of their big things is they want to be the AI and crypto capital of the world. And you have, all of the focus on investing in this infrastructure.
Mm-hmm.
But before that, especially, in late 2022, early 2023, pre-election 2024, there were so many question marks, and we didn't know exactly what we were going to get. So the honest answer is yes. I mean, I don't think there's been a time where I went from 100% conviction to zero.
Sure.
But there have been a few confidence shaking moments for sure, just because of that volatility. And, I hold crypto assets for the long term.
Mm-hmm.
And so to see the paper gains and losses be what they are,
Yeah.
obviously they're not realized until you buy or sell. Sell as far as realized gain or loss. But yeah, to see those big swings, it definitely, you kind of have to get battle tested. You have to brace yourself for it. And even when you're used to it, I don't know that you ever get fully used to it, if we're being 100% honest.
Yeah. I was curious, like, what are some of the influences out there that kind of influences the crypto market? So, like in the stock market, I mean, there's certain, the stock market goes up and down due to certain pressures. Like, what are some of the pressures or influences that really cause the crypto market to go up or down, would you say?
Yeah, so that's a great question, and there's a multifaceted answer. So I think the number one driver is liquidity. When we look at
Okay.
how
Okay.
financial markets flow, liquidity is, I think, the largest driving factor.
Okay.
And for listeners, that is going to be based on monetary policy. It's going to be based on interest rates. It's going to be based on, what we're seeing at the level of the Fed. And as that changes, and as the monetary supply has changed, and as the interest rate environment has changed, we see the crypto market be extremely sensitive to that. And
Interesting.
so, 2022 is a great example. We were in a rate hike cycle, we were in a quantitative tightening cycle, and we saw crypto. I mean, a lot of them went down anywhere between 70 and 95%.
Hmm.
As
Hmm.
we have kind of come out of that, and we haven't even really been in a full blown quantitative easing state yet this cycle. We just had quantitative tightening in 12 days ago. Um,
Hmm.
but I think liquidity and monetary policy are two of the biggest driving forces.
Driving forces. Yeah.
I would say risk sentiment based on what we're seeing in equities is another layer to it. When we're seeing like early 2024 is a great example because Nvidia was doing extremely well. I was having kind of a
Hmm.
parabolic run, and there was a big AI narrative. We saw a lot of AI crypto do really, really well. And so we've seen different correlations between what we're seeing in equities and then what we see in crypto as well. I would say those are probably the two biggest driving forces. And then, the launches of the ETF have also been pretty large drivers as far as generating additional interest, because I think in the eyes of a lot of people, it legitimized the asset class once you started to see these things traded, actually in the stock market through the exchange trade funds.
Yeah. Interesting. So it's interesting how it kind of does correlate to the regular markets. I'm fascinated to see where it goes in the next few years. So yeah, I think it's fantastic.
Absolutely. And that's one of the big things is, there's a lot of very pro crypto investors and even traders that are ultimately looking for that decoupling moment. If there
Right.
is a situation where people are wanting to quote unquote flee to safety, those are
Hmm.
times when we have historically seen treasuries do well.
Yeah.
Obviously people will flee into cash or gold or,
Hmm.
whatever they feel secure in. At some point, does that translate to Bitcoin or other cryptocurrencies? We're really yet to see that. But if we do at some point, that would be another really compelling piece. I think the fundamental principles of Bitcoin specifically say it could happen, but it's just not the behavior that we've seen just yet.
Interesting. So if like for listeners, if there's somebody out there that's not currently investing and, what would you say are like some words of wisdom that you would share with them?
Yeah. So the first thing is to self educate, self educate, self educate. And even if it's not self education, taking courses, taking classes, working with a financial advisor. I think financial literacy as a whole is one of the best tools that any person can have in their toolbox. And that's not just for business, that's not just for investing, that's life. Because the fact of the matter is, our financial livelihood dictates a lot of our optionality with the things that we get to do or not do. Or, can we afford to go to this place or have this thing or whatever it is? And so, starting with the educational piece, I think is huge. Once you have that knowledge, it's very empowering. There's different strategies that you can take on, and there's so many different ways to attack it, right? You've got anything from like the Dave Ramsey model of, hey, you want no debt, you want to pay cash for everything, you want to, mutual funds, you want to own your home and go that route.
Yeah.
For a lot of people, that's great. And then there's others that, the more of the Robert Kiyosaki model, as far as I want to use debt to my advantage. Anyone who's ever read Rich Dad Poor Dad. And
Yes.
really that kind of leads right into the last words of wisdom. Read as much as you can, because where your attention goes, your life has a way of flowing in that direction. And so
Hmm.
if you're educating about investing and wealth building and some of these other things, and you're surrounding yourself with those kinds of people that are on that same path, well, mysteriously, you'll find your life starts to gravitate in a similar direction. And so the education piece, the reading piece, if you take it seriously, and you really start to dive into it, and it becomes hey, this is something not that I should do, but that I must do.
Hmm.
Then at that point, I think a lot of people see that as the next catalyst towards their financial livelihood. And so a lot of that just is, let's go back to basics. But I think the basics are tried and true for a reason. So those would be my sign off words of wisdom.
No, that's awesome. Do you have like a favorite book?
My favorite book is definitely Rich Dad Poor Dad.
Okay.
So if anyone has not
Interesting.
read that, it is so fascinating as far as
Yeah.
not just, obviously Robert Kiyosaki is a big real estate guy. He's been a proponent of Bitcoin, big proponent of gold,
Uh-huh.
but just the mental framework as far as, wealth acquisition and building, that for me was a really transformative read. So that is
Hmm.
definitely, I would say, my number one for sure.
I love it. Very cool. Well, thank you so much for talking with us today. We covered a lot of ground and some great information. No doubt our listeners are going to come up with at least a few tidbits off of this, and I feel like I understand it better. So thank you for the education on this very much. So,
Yeah,
um,
absolutely. And
yeah,
as I mentioned at the beginning, thank you for having me. It's been a
yeah,
pleasure to chop it up with you for a little bit, and
yes,
would love to do it again sometime. We'll see. I
yeah,
always like to leave that open
absolutely,
ended, but no, thank you so much for having me, and
yeah.
love to add value to the listeners however I can.
Yes, thank you very much. And to my listeners, thank you very much. We're going to put the links in the caption to how you can get in touch with Spencer and look at his websites and YouTube channel. And as always, please like, share, and subscribe.